Hi, everyone. How are you? This is the Love and Money Show. Hope that you are well. Today, we're going to talk about what is going on in the housing market. So, as the headline says, the mortgage rates have surged close to 7%. So, back in the day, mortgage rates were 2%, then they were 4%, then they were 6%. Most currently, it was 6.6%. And as of today, the rate is 6.7%. Mortgage rates are on the increase, and that is because the Fed keeps hiking the rates up. So when the Feds hike the rates up, the mortgage rate goes up. So it's at 6.7% as of yet. So as you know, the purpose of the Fed increasing all of the rates, all of this inflation, the purpose of increasing the rates is to increase the rates, lower inflation. So, the purpose was to get you to stop spending your money so that people will go back to charging the prices that they're supposed to be charging. So, that is the reason why the feds are hiking the rates. The purpose is to get a control over this inflation, as you know. In other words, to stop spending your money. So, housing sales have decreased. Lo and behold, this was one of the purposes, get you to stop spending your money. So less people are buying houses. There are less people taking out loans, less people doing refinancing. However, instead of getting a hold on these inflationary rates, the rates in the mortgage industry is basically staying about the same or actually going higher. The reason being is because there's a shortage of available homes. So that is the reason why we're not really curtailing these prices here. There is a shortage on available homes. So, like I said before, refinancing has decreased, people buying homes have decreased, people taking out loans have decreased. The mortgage rate is currently at 6.7%, like I stated before, and that rate is expected to go up. So it's at 6.7 right now. It's expected to go up. So the feds increased the rate hikes, mortgage rates rise. However, there's some little steps in between that. It's not an exact correlation. We think that the feds raise the rates and then the mortgage rates rise. But I'm going to talk briefly about what is going on in between. So the mortgage rate is actually tied to what is called US Treasury bonds. So the feds, they raise the rates, rate hikes. Then the investors, they start selling what is called government bonds. So imagine, for example, say that you are a Robinhood investor. You're new to investing and you have government bonds, but you're not aware that you have government bonds. So these government bonds, they are hidden inside of your mutual funds or your ETFs. So look very closely to see what is in there. What is it that you're actually purchasing? So these government bonds are inside of some mutual funds and some ETFs. So imagine you're a Robinhood investor. You started investing during the pandemic. You have government bonds because you bought some mutual funds, you bought some ETFs, but you're not aware that you actually have some government bonds. So you look at your Robinhood account and you see all this red. These stocks are falling. Oh my God. I am losing money. So the first reaction to a brand new investor, if they see that it's all red here, they start selling. So the feds, they raise the rates, the stock market goes like this. You see red, looks like you're losing money. I am losing money. I need to get rid of this. People start selling their government bonds, which are inside of the mutual funds or the ETF. As a result, the yield of the US Treasury bond increases. Another word for yield is rate of return. So, say for example, you have a government bond, but you don't know it. You have a government bond, you bought it for $1, but your Robinhood app says that it's worth 50 cents. Oh my God, you just lost 50 cents. I need to get rid of this. So you sell it so that you don't lose the rest of your 50 cents. You sell it. The person on the other end, they say thank you because they know that this dollar is still worth $1 if you just wait for a little while. So you think you lost money because it's red. It says red on your app. You get rid of it. Person on the other end says thank you, and they just made some more money. And you just lost 50 cents because you sold too early. So that is an example of what is happening, if you get what I'm saying. So it starts with the Fed. They say, let's go in here and raise these rates so these people can stop spending all their money. That negatively impacts the stock market, where you're looking on your app and you see all red. It looks like you're losing your money. So you sell before you lose any more money. You have this in there. You sell it. You lost 50 cents. You're going to sell it before you lose your whole dollar. You get rid of it. Person on the other end says, thank you. They just made money because they know that this dollar is still worth $1. But you think you're losing money because all you see is red. They say thank you. So the yield on the 10-year Treasury bond increases. They made money because you sold too early. They made money. So this increase in money that they made increases the mortgage rate. So there's a lot of little steps in between. It's not just that the feds raise the rates and your mortgage rate rose. There's a little two more steps in between. So the mortgage rate, when you look at the mortgage rate is actually connected to the US Treasury bond. When the rate of return is high with the US Treasury bond, then the mortgage rate will be high. So there's about 4 steps. All right, so that is what is going on. And that is why you're seeing increasing in the mortgage rates. So what that does with the increase in the mortgage rates is it raises the monthly payment. So just to give an example, say that you bought a home for 390K. You put 20% down. Interest rate was 3% because this was um, last year or the year before. So the payment on that, the monthly payment on that would be 1,317. Take the same home, increase the mortgage rate to 6.7%. So instead of having a monthly payment of 1,317, your monthly payment is going to be $2,013 a month. So that's what the increase in mortgage rate does. It increases your monthly payment. So this is on the buyer side. However, if you are on the investor side, meaning you're the one that actually own this property, you're the one that owns the real estate, everything that is going on is making you wealthier, making you richer. So there's the increase in rents. There's also the increase in the value of your home, increase in appreciation. That's why it's so important to own real estate, not rent real estate. regardless of what you may hear other people saying. Inflation makes real estate investors rich. So, if you're wondering what to do right now, if you should just wait it out or if you should go ahead and purchase property, what you should do, keep in mind, I'm not a financial advisor. This is not financial advice. Go get your property because what's going to happen is the rates, they're going up. They're going to keep going up because the Fed is going to keep hiking the rates. So just get something that you can afford. Make sure that you know what the monthly payment is before you uh, actually purchase the house. Make sure that you can afford the home. And then keep in mind that you could always refinance the house later. But you do want to make sure that you can afford that it affordable now and you know what the mortgage rate is now. All right, so that is what is going on in the housing market. The feds, they're going to keep raising the rates and the mortgage rates are going to keep climbing. They're expected to keep going up. So, what you desire to do is go get your home now, not only because it takes time to find the home and it takes time to sign on that dotted line, but the fact that the rates are going to keep increasing. They they're not going down like you expect them to go down. Like people are waiting for a big crash to happen. They're waiting for foreclosures to happen all over the place. But keep in mind that the feds are actually involved in what is going on, and they're they're hiking the rates with the purpose of decreasing inflation. Their purpose is that you would stop spending all of your money so that people will come to their senses and charge the prices that they're supposed to be charging. So, because the feds are involved and they're raising uh, they're hiking the rates, the mortgage rates will continue to climb. So, you can buy the home at 6.7% right now. And then 3 months from now, you can buy it now, 6.7%, or you could buy it 3 months from now at 9%. So those are the two reasons why it's a good idea to go ahead and get the home now. Number one being that the rates are going to keep climbing because the feds are involved. And then the second reason is that it takes time to purchase the home anyway. So this is not a quick thing buying property. So might as well get started now. All right, this is Love and One Show. If you like this show, please hit the like button. It helps the channel. Please hit subscribe if you're not a subscriber. Hit the share button right there and leave a comment. Let me know your thoughts. Thank you for watching. Have a good rest of your night. Go get your home.